Good day. So I am going to be doing a trade breakdown on a trade that I took on the 27th of August. It is currently the 2nd of September. As you can see, we now have the new monthly candlestick of September, and as I've stated previously, that I'm looking for price to draw for the 0.5 standard deviation level, or if we don't reach that, if we don't draw for the all-time high, the current, which is the previous monthly high, and the 0.5 standard deviation level, then I'd like to see price draw for this monthly busy down here, right? And it's literally the same analysis on US 500. I'd like to see price eventually draw for the 0.5 standard deviation level, but at the moment I want to see price draw for the previous weekly high. If we fail to trade higher, and then my attention is on this monthly busy, which I will see if it can offer support to trade higher eventually. Okay, we drop down to the weekly time frame. This daily busy is gonna make sense when I'm on the daily chart. So as you can see, we've actually been rejecting off the 0.5 standard deviation level. We've traded lower ever since trading into it. Right now, this is our current all-time high, as I've marked out. Right, so for the week, I was looking for price to draw for the all-time high and the previous weekly high. Right, so I've been looking for price to receive support from this weekly busy and then just trade higher. Right, and then that's the same analysis basically for US 500. I want to see price obtain support from this order block and then just continue to rally higher. And as you can see, we have the old new weekly opening gap right there, and then this is the new weekly opening gap as well. Well, at the time it was the current new weekly opening gap. Yes, so I have those two marked out as they are relevant. Yeah, they are relevant for where price is. Right, this daily inverted fair value gap will make sense when I am on the daily charts. Oh, okay, so this is the consequent encroachment level of this large wick. Right, if you take that large wick and you anchor a Fibonacci on it, the CE is a level that I'm paying attention to. Right, so for the trade that I took on the 27th of August, I was looking for price to respect this inversion fair value gap, which I am not marking, and this daily busy. Right, so I was looking for price to just continue higher, and at the time, here's the 27th of August right here. At the time, I wanted to see price draw for this swing high over here. Let me just mark that out. Swing high. Boom. There you go. So I had my attention on the swing high right there, and I knew that price could trade into the swing high and just reject lower, but my attention was just to be bullish, because I'm bullish on a high time frame and we've traded into this busy, so I wanted to see price draw higher. Same here, basically I wanted to see price rally higher since NQ is bullish, and here since we are respecting bullish PD arrays. So my joint liquidity for the day was a swing high right here. Mark that out, swing high. There we go. And then I was also looking for price to draw for this all-time high. Well, at the time, this was an all-time high. All-time high. So I was bullish, right? I was bullish for the day. I wanted to see the daily chart expand higher, and as you can see, we expanded higher, although we closed off bearishly, but we expanded higher, which is what I was looking for. Okay, so the price action for the day was right here. as it's actually quite clear. Look at like my approach, even including the other trades that I've taken in the past. Look at how it's always like a top-down analysis. The daily chart is in sync with the 4H, the 4H is in sync with the 1H, 1H is in sync with the 15 minute, 15 minutes in sync with the 1 minute. It's always like a top-down analysis. There needs to be that synchronicity. So as you can see, this is the only fair value gap that we have right here. So I wanted to see price respect it and use it to draw for this swing high. Obviously, now that we've taken the swing high, price has already taken out buy side liquidity, which is this high right here and this swing high. It's now eligible to trade back down realistically, because we've already rated the buy side liquidity. Okay, so US 500, let me just fix that real quick. Same as well, like this is literally the only 4H fair value gap which is relevant and is present. Look at how the bodies just tell a story. The bodies stay above the upper portion of this BSC. The bodies don't even close below the upper portion, which just shows that price is extremely bullish on US 500. US 500 is extremely bullish. Can you mark that 4H BSC? There we go. Right, so my attention was on the fact that price is actually in a market maker model. Sell side liquidity swept, inversion fair value gap. Just look at how price is creating a buy program, respecting this order block, trading higher, trading into this BSC plus order block. I think I spoke about this in the previous video. Look at that PM session. I'm paying attention to all this buy side liquidity. We trade higher, we don't raid the swing high, which creates what? It creates engineers liquidity at the top. So at the top of engineered liquidity, when we leave that behind, and what is this? This is Asia's high, so this is quite relevant. Yeah, that's Asia's high. Where's Asia? Right there. But yet again, this is not only Asia's high, we also have Asia's high, and what is this? We have equal highs, we have relative equal highs. So this is what I wanted to see, because price just dropped all the way down. I was not chasing this, I was just simply observing it and waiting to see if you can get an opportunity to long. My attention is also on this order block right here. This order block. I need to see price respected. I need to see bullishness occur from here. If we're bullish, I wanted to see it happen here, which is what we did get. OB, there we go. Can you see it's genuinely like a top-down analysis? This is how like my winners look like. It's like my winners look like this, top-down analysis. Okay. Boom. Yeah, I think that's clean. And then I'd refined this 4H BSC into this, like my attention was on this BSC right here. I refined it and I placed my attention on this 1H BSC right there. So I'd refined that. Oh damn. There you go. Here's 930 somewhere here. And then we also had I was just looking for price to draw for this swing high and all-time high. And we're in like a clear buy program, buy program until we rated the all-time high. We eventually rated that buy side liquidity. So this is where like I was paying attention to. Let's drop down to the 15-minute. I think I really liked the 15-minute time frame, simply based on the fact that like if you pay attention, right? If you pay attention, you can clearly see that like look at all of this. All the inefficiencies have been priced into. We've priced into all the inefficiencies. Even here and up there, the only inefficiency in this leg, this buy leg that we didn't price into, was genuinely this 15-minute. But see, we haven't traded here, right? We haven't traded into that, and including this BC right here, we didn't like completely fill it in. So I'm looking at this 15-minute discount pretty right. 15-minute, let me mark that out. So I'm paying attention to all of this, right? I want to see this provide us support to trade higher. We have relative equal highs. Look at that, too clean. We do damage to the sell side, but we left this in place, which just showed me that like we want to come back up for this. Looking at the fact that we're bullish in the high time frame. I also want to see price show for the swing high, which we did get. Yeah, look at that. 945 trades down below into this rejection block, into this 15-minute busy. Look at how price just fails to close through the 15-minute busy. Just shows that we are bullish, We are indeed bullish. Okay, cool. Yeah, this is pretty much clean. Yeah, just look at these equal highs. This is my drawn liquidity. Like, look at these equal highs. This is just too smooth. Like, price cannot leave this behind. Price cannot leave this behind. Equal highs. Boom. We also respected this order block right here and the consequent encroachment of the 1H BC. I'm paying attention to all of that. 15-minute. Are we on the 15-minute? Okay, cool. Let's drop down to the 1-minute time frame. Okay, so this might take a while. There we go. Right. So this is where my attention is on the day. And I think, let me just switch this on. Oh damn, there was like a old new day opening gap somewhere here. Right, there was an old new day opening gap which just like provided me with confidence. So as you can see, we clearly just downtrend all the way from like 8:30. 8:30 we just downtrade, 9:30 we downtrade, and now that we get to the macro, look at that, 9:49, 9:50 we begin our first bullish candlestick. Literally 9:50 we created a bullish candlestick and we just began trading higher, right? So one of the best entries was taking this over here, this fair value gap. You could have entered long right there and then drawn for higher prices, but I didn't really trust this. I wanted to see price show me more, right? And by show me more, I wanted to see price violate bearish PD arrays, right? I know we violated this, but I wanted to see price violate this inversion fair value gap. Once price trades above that and closes above it as far as the bodies, like that's when I would have longed the market. So like, okay, we have the framework from the top all the way to the bottom, but I just want to see price violate bearish PD arrays. So that's what I was doing. We violated that, right? And I think I went long somewhere here. My stop loss was, I wanted to use this, but there was a time when I had anchored my stop loss incorrectly and I got stopped out prematurely. And then I learned that like it's always best to use the intermediate low as a stop loss. This is an intermediate low because it's traded into a fair value gap. So yeah, I realized that it's best to trade my stop loss here. I think I entered something here if I'm not mistaken. Yeah, and then I was like targeting this Asia's high, right? And I got stopped out somewhere here from this down drop to the south side, so it stopped me out. Let me see if I can get some trade executions. Yeah, there we go. Enter long here. My stop loss was like below this. And my take profit was up here by these Asian session highs and the buy side liquidity. Buy side high. If I would have got there, that's like a nice 3-hour trade, you know. So like a nice 3-hour. So yeah, price, and I was just like paying attention to all of this, like respect to this busy, look at that, respect to this oil block, respect to this oil block. It's supposed to be like a proportion block, but we just like don't expand higher. We do like a lot of work in this order block and like this fair value gap, and then eventually we leave it. At this point I was like confident that okay, fine, we're finally leaving it. My stop loss was below this swing low, and boom, price just ran it out. That's okay because I came out profitable on the day. It's okay, I was profitable at the end of the day. Okay, there you go. 9:30 open up, trade higher, trade higher. Basically, nearly the same thing. Nearly the same thing. Okay, cool. Let me see how much I actually got for the day. Oh, I just got like 159R. It's crazy. Okay, cool. So I was also paying attention to the fact that like, look at the fact that like we began buying during the macro, right? So this is like a good time to be a buyer because we are in the 950 to 1010 macro, you know. So yeah, that's another thing that could have made one be confident in long the market, because we're in a macro and we are getting this type of price delivery. You know, it's time and price for a reason. It's the time and the price is correlating with me being bullish, you know. There's always like some sort of SMT, you know, if you pay attention. Like, look at this, that's a SMT with this low right there. Like on these good trades, there tends to be like a lot of SMTs, you know. I might not mark it out, but like for some reason, like I always see an SMT, you know. So this is like something that's very helpful and good to look at when you're trading by yourself and you're bullish. And even if you look at the 15-minute time frame, right, this is the lowest that we have right here. um okay, cool. What is this? Okay, anyway, look at that. Like, we genuinely have an SMT right here. If you compare it with like US 500, look at that. If I'm not mistaken, look at that. Here we failed to trade below this low, right? You know, there always tends to be some sort of SMT like around these times, around such PD arrays. There tends to be an SMC. You know, we have two SMCs. Alright, this is how you know a trade is good. You know, look at that. Like, there always tends to be one for some reason. Look at that. Sorry for taking so much time. Yeah, this is pretty much clean. This is clean. Yeah, I got stopped out somewhere here, but as you can see, price eventually did draw for the buy side liquidity. Eventually we did draw for it. Yeah. And you also had like a macro here. Mark this macro out. Yeah, but it wasn't really relevant, so I'm just leave it out. Right. So my trade execution to this video can be found on my Twitter account. Right. So this trade that I took on the 27th of August can be found on my account, just to watch how I handled it in real time. You know how I was managing this trade, and like, you will see my annotations on my screen. So that trade execution can be found on my Twitter account, and that's pretty much it for the day. Hold on, I think I'm gonna just remove this. It's not as clean as I like. Yeah, so that's pretty much it for the day. Enjoy your day, and of course, be safe.